Good morning, everybody. Welcome back to another pre-market live stream here with the Everyday Growth Advisors. Hope you're having a good morning/evening, and of course, hope you had a great weekend. There's not a lot to cover today, but we're just gonna kind of get through it anyway. Starting off with pretty much a technical update here with the SPX. The newsletter was sent out about, I want to say, 2 hours ago, so that should be sitting in your email. Make sure you read that. There is a lot of rotation of capital, but right before I start, make sure that you understand that this week is going to be a short week. We only have till Thursday as a trading day this week, and we're likely to see a lot of price action that's either going to be very, very quick and hard hitting, or we're going to see price action that's very, very slow. So it will be either or. And then we do see unemployment numbers this week as well. So that's going to be something else that will be coming out. But I believe the market's closed when unemployment numbers are coming out. So we probably see the effects of that the week after. Now, just kind of touching base on the technical perspective here. Now, we've been covering this rally for a very, very long time. Ever since we came down here with the banking panic, I told you guys that it is a temporary detour in which we're going to take steps back all the way into the 4060 and 4100. And last Friday we got there, and now it's time for smart money to start rotating out as retail starts buying this FOMO. And they start buying up all of this, and people who are underexposed start taking this upside exposure. We're gonna see smart money rotate out of this structure. You'll see my email, and you'll see the figure of how disconnected smart money is with dumb money, and that's gonna be a very important little graphic for you to see. I think I posted it on the newsletter. Yes, I posted a newsletter. So make sure you have a look at that little diagram, because you can see how disconnected retail is from this. They've been thinking about, oh, the market's going to crash, and the market's going to crash, and the market's going to crash all this time. And that was a great opportunity to buy the dip, which I've been talking about for a very long time, because if you don't understand macroeconomics and you don't understand, as I mentioned before, people were like, oh, the Fed has done another round of QE, and it's going to cause the market to fall again, and we're going to die. And now over the weekend, there was another fear-mongering headline coming out about the US dollar. The US dollar is going to fall, and we're going to die, and everything is going to zero. And I find it hilarious because people don't understand how things work, but it's fine. I mean, I guess there's a certain amount of fear that they have to instill so that all of these positions, these yummy positions, can be taken on by us instead of them, and that's completely fine. I'm okay with that, just as long as they continue getting hoodwinked and we continue making money. That's the most important thing, because if everybody was smart, then you wouldn't win in the stock market, and that's the harsh truth that you need to realize. This is a zero-sum game. Only one person can win in every single trade, okay? And so therefore, I like the fact that people fearmonger and they do these things, because it gives me opportunities, buy things for cheaper. It gives me opportunities to, take the other side of the trade and provide capital for a return, okay? Now, SPX has come up to 4,100 as of Friday, and it's hanging out here. Now, there's a couple of things. So I'm going to get out the daily chart here. As you can see, we have been in this little uptrend. We bounced very strongly here. And then we had some rejections on the top here. We haven't quite tested this top here, so there's a very high chance that we get up there at some point. We obviously can't tell when exactly, but, at some point we're going to go touch this upward trend line here. Now, getting into the 4-hour, you're going to see that, we have been supported by this interim 4-hour trend line. There's a smaller trend line here. You can see it kind of. And so there might be a little bit of a mean reversion back here at some point. And if that happens, then it might look something like where we form a bull flag, kind of sideways like this. And if that happens, that's going to be kind of painful. So that's scenario number one. Okay, scenario number one. And that would be like the whole week, either 1 week or more even. You can see it's like kind of like, it'll be like 10 days of April. and we're already in the third day now, so we're talking about another 7 days roughly, right? And if so, then it could even last up to about the next week after that in terms of this cycle. If that doesn't play out, and that's scenario number one, which is a sideways move, which will be very painful for retail traders, right? Then what's likely to happen is if bulls come back down to 40.60 to find a decent amount of liquidity to kind of grab here so that we can paint this to the upside, okay? We need to grab liquidity. You guys need to understand, even though we don't want the stock market to drop, it has to, okay? It has to, because the market is nothing but waves. It is a wave up and then a wave down and then a wave up and then a wave down and then a wave up and then a wave down and then a wave up and then needs to be a wave down. So at some point in time, the wave down is coming. Now, we don't know exactly when, but what we do know is that we can take a adjusted risk to reward ratio basis and the approach of using probability and statistics to make our decisions, okay? So 4180 is the next target up here, which we had visited before in the month of February, okay? February, I'm talking about like last 2 months, okay? This was the high we got to, and then we did a similar move. You can see we did like a sideways move, and then we came down, right? And so here we have not obviously a similar move, but we could obviously come up here and then move sideways, and then we can break out after that. So there is a similar price structure here that we might play out with. It's just how exactly it's going to work out. Are we going to move sideways now and then break out? Or are we going to come back down, find a little bit of support, then blast, and then move sideways and then break out, okay? Either way, it's either now or later, but essentially you're going to have a little bit of sideways action at some point. And so you have to be very, very careful with options trading this next couple of weeks. Why? Because theta can really eat into your contracts if the sideways moves happen, okay? So this is a good time, in my opinion, to start selling out the money covered calls on your shares and other positions, okay? Take advantage of this extended move here and the FOMO that people are going to take on to sell above the strike out the money credit calls so that you can earn a little penny in the meantime and take advantage of that move, okay? You have to have a variety of different tool sets in your toolbox to take advantage of different market scenarios. When the market is oversold and people are fearful, you can buy call options and play the wave up. But when the market is bought up and it's approaching the all-time high, this is a great spot to sell covered calls, okay? Especially if you get up into the 4180, then that's a good spot to sell covered calls even more, okay? So just saying that there are like two main ways this could play out. Either you go sideways now and then move up, or you move up and then go sideways and then move up again. And ultimately, we want to go into this 4250 to 4300 zone to reclaim this supply zone, and bulls need to put the pressure on if they want to continue this rally to the upside. Now, you need to understand that the market has already fully priced in extreme pessimism at this spot, okay? They've priced in the likelihood of a recession happening in the 6 to 8 months to follow. So you guys need to understand something. In the next couple of months, there is going to be a lot of bearish headlines, okay? There are going to be a lot of bearish headlines, and the market is just going to keep going up. Every single dip is going to be an opportunity to buy. So please do not let the news headlines dictate how you feel about the stock market, because the stock market is not the economy, and the economy is not the stock market. And the stock market is the leading indicator of the economy, which means that when the recession happens in 6 to 8 months from now, let's say now is April, we are looking out in about October, right? 6 months from now, right? In October, when the recession hits, it's probably going to be a shallow recession, but it will last for until the end of 2024. And by this time, everybody is going to be extremely confused, because they're going to say, why is the market ripping higher and higher when we are in a recession? Trust me, it's going to happen, okay? And people are not seeing it now, but obviously you're going to get many, many more opportunities to buy the dip. So my advice to all the people who have lost out on all this opportunity to buy shares, especially if you didn't buy it here, and then you didn't buy it here, and then you didn't buy it here, all 3 times in which I had bought shares, right? Then you should take advantage of the next time that people start to sell things in panic, okay? Remember, you always buy in panic and you sell in greed. So this is the opportunity where people are starting to swing between both of those things, and therefore you want to make sure that you're not going to buy long-term positions here. Hang on, be patient. If you want to buy long-term positions, the opportunity is coming in the future. Just hang tight. Okay. Next up is NASDAQ. Different scenario altogether, much more stronger than the S&P 500. We've been talking about how much stronger the NASDAQ was to the S&P 500 right here when we came down all the way. I did mention we were in a nice little bull flag here, and we broke out, and we're continuing to rip higher. If NASDAQ can hold 13,200-ish, then we are likely to go up and test the 13,555 level. This is the previous resistance, and then it's likely to see a similar scenario with SPX, where I mentioned either we go sideways here and start to come back down to 12,780 to find that support, base support, and find a little bit of liquidity down here, even possibly stretch out to 12,428. Either we go down and then get that now and then go up, or we continue ripping higher and then we move sideways here, and then we rip higher after that. So there's two scenarios this can go, and obviously unless some systemic risk issue comes out in the market, which obviously we can never know that, then that's likely the scenario to play out. Next up is IWM, and this is one that we've been watching for weeks now, right? I told you guys what excuse me excuse me. I told you guys about IWM for I think about 1 week now, and we've been waiting for this to break out. I told you guys there's this range here at 178, 179 that I want to look at, and once we start to break out that 178, 179, then we can start to take some of this upside, right? So we are getting pretty close here, and we need to see this breakout happen and a little bit of a pullback for us to take this upside. Right now, the thing is that the S&P 500 is still kind of sulking. So in order for the IWM to get some legs, we need the SPX to be strong. Remember, some of the Russell 2000 small mid caps are also part of the S&P 500. So you have to be aware that the S&P 500 cadence is going to be important. Okay. Next up, XOP decided to rip and on some news that OPEC is going to cut supply. Now, I don't quite agree, that oil is going to, continue to rip higher. But let's see how it starts to react at this 140 level. It could really, honestly, rip up all the way to 140 and then still reject and come further down. The thing is that oil trading is going to be a little dependent on how China reopens and how demand stays for a long period of time. And honestly, if they're going to cut supply, that means that they're expecting a slowdown in the economy. So their forecasting must be, something along those lines. So I think I would like to let this price action play out the way that it's going to play out. I did take a short position at around 126, 127 here. If it can come down a little bit and kind of give me a retracement back down, I will gladly close out that position for a smaller loss. Otherwise, I'll just take the L in the position that I took already. Remember, you can't always win every single thing. So, you win some, you lose some. Last week, I had a great week. Just so you guys know, I closed out close to almost, I want to say, $25,000, close to $26,000 actually. And it was a pretty good week. So I will be looking for how that's going to continue this week. The small account, by the way, the small account closed out roughly about $51 in profit. We didn't trade much on the small account, just a few contracts here and there. Of course, we did catch a little bit of this and that, but this week we'll trade the small account more, and of course we'll be playing that one more. Remember, you still have 14 days free trial. You can sign up for it on the link in the description below. You can join us during our live trading sessions and trade live with us every single week. Next up is the VIX hovering below the $20 level, so that's in a good little range there. The US 10-year yield continues to move in a sideways direction here, and yields are getting a little bit more liquid and stable, which is good. Also, the US dollar has been kind of continuing its move down, and we fully expect it to come down and touch this 101.50 level. So the dollar index is probably going to come down around the 101.30, 50 level, which is going to retest this level, and then we probably get a bounce after that. So we do have a little bit of room down on the dollar before we see that bounce, and that will kind of coincide with the move on the equities, where we see probably NASDAQ go up to here and SPX try to go up to here before that reversal happens on both of these indexes. Because when the dollar starts to go further up, then that reduces the dollar parity. So that's something that you'll have to keep in watch. Okay. Let's see. Thanks for reminding on cover calls. No problem. Yeah, I did remind everybody it was a short week. So Friday is Good Friday. Remember, markets close on Friday. So please, this week we'll be holding only 2 live pre-market sessions. Thursday I will be out and about, and it's very unlikely that I will be trading on Thursday, but I will still be obviously checking my phone and kind of looking at things. So this week is going to be a really short week, and we're going to have to make as much money as we possibly can on Monday, Tuesday, Wednesday. Thursday is likely to be a very, very low volatile day, and then Friday is off. So weeks like this are good for traders because otherwise we don't get real holidays. Your regular holidays don't apply to us, so it's a good time. Now, just want to review BABA really quickly because this is something we caught an entire wave of last week and the week prior. BABA has been exceptionally great trade. I made almost $23,000 on this one last week, and then continued with that. We rolled into further contracts, giving me another $5,000 to $6,000, a total of exactly $30,000 on BABA last week. This was a great trade. And for those of you that have been attending the live pre-market sessions, we talked about this coming down here. I talked about these 3 levels, right? Boom, 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 and we bounced right above this level. So we took that position right at around that 87.50 level, and the next day it shot like a rocket over the next two to 3 days. So we got a lot of that and played that perfectly. Now I still do have some BABA calls. These are roll calls mainly. I have some 115 calls for 21st April. This is a roll position, but it's a very small risk allocation, basically using some of the profits from last week, because this could continue to go higher, and I don't want to lose that upside exposure. That's the way you roll. You keep rolling until you pretty much lose the money. So you keep making profits, and in turn, that's how you'll maximize the returns on your positions. As usual, let's cover Tesla. It had some news this morning. Deliveries came in as expected. Market kind of gave that a little bit of a discount valuation this morning. It's down just a little over 3% pre-market. And so everybody who was betting on Tesla calls last week, I think they're about to get clapped at the open, because if Tesla's not able to climb back and cover this gap and continue higher above 209, then it's very likely that it's going to continue sideways, or even move further down here and move sideways in this really big channel here. So we'll be watching Tesla pretty closely to see how it kind of interacts with all of these price action levels heading into this week. Thoughts on CrowdStrike June 150. Rich, I'm not sure if you read the newsletter, but CrowdStrike is one of the top picks from this week. It's actually the trade idea of the week on the newsletter. If you read the newsletter, you'll see what is the plan for CrowdStrike. Above 138 is the call option possibility. So we'll be looking for above 138 with the bounce to play up into 3 levels. I believe the first one's going to be around 142 or so, and then the next one's going to be 152, and then after that 159. So I have those 3 levels to the upside, and if we reject 138 and start coming down here, then that's going to be pretty much rejection here, and we'll be looking for a confirmation on CrowdStrike for the rejection below around 132, I believe. That was the level that I had put on the 132. Yes. Rejection and break below 132 will give us the 127 ultimately, and then 120, and then below that you have all of this downside here. So either way it could go. We'll see. I think it's more likely to break to the upside than downside, but seeing how NASDAQ is right now, and it has a little bit of upside here, not a lot, but a little bit of upside, it might do one of these things where it breaks and then comes back down into the stupid trend. So you have to be very careful with CrowdStrike. Don't take too out the money. My advice is don't go something like 150. I would go halfway between, something like 140 or even 145 would be safer instead of playing 150. That's a bit out the money. And then you can just play and adjust your position based on where you think it's going to go. Should I get out of my MU calls that expires 23 April? I don't know what is your strike and what is your position, so I'm not able to really fully advise you. But maybe if you give me more information, I can help you out there. So let's see. You have MU calls, but what strike are they? And you said 23 April. So what strike? Semiconductors, I mean, still looking pretty decent. I mean, the thing is, MU is not really one of your run-of-the-mill usual semiconductors, though. So that's the thing. A lot of people get this one kind of messed up because it's not your usual semiconductor. Costco. Okay. By the way, there are obviously a lot of opportunities this week. You kind of have to go in and look at them. I'm gonna cover most of those with the group on Discord right after I get off this live stream. Costco's looking nice. I mean, I think it's still coiling in this pennant. I have belief alert set up. Oh, I don't have alert set up. Let me see. Okay, so Costco needs to break above 512 for a bullish move. And it needs to break below, I want to say, around 465 for a bearish move. You could also play the wave down below 484.50 here. So there's a possibility for both sides to see some movement here. That's the way I would look at it. 67 calls. Okay, Micron 67 calls. Yeah, I understand why you took those calls, but I'm guessing you took it like right up here somewhere because that was a bad move. You should have waited to see how it breaks out. This is the reason why we wait for confirmation, guys. You need to understand that when a stock is approaching a supply zone or an area of resistance, you never ever take calls without having a confirmation. What does the confirmation look like? It means it breaks out and then it comes back for a retest, and therefore it gives you an opportunity to play the bigger, broader move rather than trying to aim to. You need to understand something. From here to here, your risk to reward ratio is pretty terrible, right? You're taking on all of this risk for this much of reward. That's crap, right? Versus if you would have just waited for this to form a new demand, you can now take on a much smaller amount of risk for all of this upside up into the 61.8 extension. You see how the trade dynamically changes, like really, really, like by a lot, just by you changing the ideology of how the risk structure works and where the supply and demand imbalance starts to change. So you need to understand this as a trader. Never ever do that. Now, my advice, cut the trade, move on. So I would cut the trade and move on because you don't know if it's going to come back, and you're just going to hope and pray, and you have 20 days and Theta is going to just eat at you. On top of that, yeah, sure, it can get up there, but then NASDAQ might move sideways here. So my advice, cut the trade, move on, take the hit under your chin, and remember to never ever take a trade expecting a breakout because it's unlikely to happen. Okay, you need to always wait for confirmation and always have that at the back of your head. Okay, usual suspects. Now, there obviously are sector rotations, and we'll talk about those on a separate time because I want to have a chance to talk about it with my team first on Discord. I haven't spoken to them about it, and so it's unfair for me to kind of talk about sector rotations on the live stream, the pre-market live stream. So I will talk about sector rotations on Wednesday with you guys after I've briefed my team and we've had 2 whole days to trade it. And then there is a sector rotation that is coming. So I'm going to be briefing you guys on Discord in a little short while. Those of you that have not joined the Discord, once again, 14 days for free. You can join. You can see if you like it, if it's a fit. If it's not a fit, then just cancel the subscription and move on. If you think we do good work, stay on, right? We also have the 5K challenge that has already started. So I don't know. It doesn't make any sense not to be a part of it. You can join for free. You can be there. You can see if it's your cup of tea. And if it isn't, you can leave. It's simple as that. Really easy and simple. I don't know why you wouldn't take advantage of it. But either way, if you do take advantage of it, I'll see you there. If not, I'll see you on Wednesday. I hope you have a great trading session. I'm going to jump on the Discord now. So take care and peace out, guys. See you on Wednesday. And remember to manage your risk and don't go crazy with any unusual trades. All right? Bye, guys. Take care.